My dear students, now that you have learned how to calculate total sales and total purchase and how to make an income statement using single entry incomplete records, lastly we have to discuss some other points. Basically, in a single entry question, when we are making a statement of financial position, that is balance sheet, we are not being given with the figure of opening capital. Okay, if the capital figure is not given in a single entry scenario, how can we calculate that opening capital? The opening capital can be calculated using a simple equation, and as you may be aware that capital is equal to assets minus liability. If we need to calculate the opening capital, it is also known as opening net assets. Capital is also refers to as net assets. If we can how can we calculate opening capital? We'll be writing opening assets, and there will be all sorts of assets, whether there are non-current asset or current assets. We'll be adding up all of this in order to calculate net assets. And if we have some maybe non-current assets, we need to write net book value of non-current asset and not the original cost. If we are also given the original cost of non-current asset, and if we are also given the accumulated depreciation, also known as provision for depreciation, we need to deduct the provision from depreciation figure from the cost figure in order to calculate the net book value figure. Okay, so if we have all of the net asset value, or that is total asset value, these are non-current and current, and if we deduct the total liabilities, that is at the start of the year. Opening liabilities means, my dear student, liabilities at start of the year, and opening assets also means that assets at the start of the year. If we deduct assets and liabilities, we are left with the figure of capital, that is opening capital. So this is basically a method to calculate opening capital in a single entry environment. Okay, lastly, how can we calculate profit whenever we cannot make an income statement, or whether we are not required to make an income statement, or whether we cannot make an income statement due to the limitation that we do not have sales and purchase values, and we cannot make a debtor account, SLCA, or creditor account. So now there is a shortcut method to calculate profit whenever we cannot make an income statement, or where we are not required to make one. So as you may be aware, whenever we make a statement of financial position, that is balance sheet, there is a capital section, and how we calculate capital, the figure, the value is, the format is opening capital. Then we have additional capital invested during the year. Whenever we invest the further capital into the business, our capital would go up. Whenever there is a profit, wherever we are earning profit, that profit increases our capital, and if there is a loss, the loss would reduce our capital. Then whenever we draw goods or cash out of the business, the drawing reduces the capital. Finally, we have closing capital. So I hope you are aware of this equation, where this is used when we are making a statement of financial position, that is balance sheet. Now the opening capital would be given in the question, or we can calculate opening capital. How? We need to deduct opening liabilities from opening assets in order to make calculate opening capital. For example, we have opening capital, that is 100,000. Now in the question it is mentioned that we have invested further capital into the business in this year, that is 50,000. Now the profit is not there. We need to calculate profit in the first place. Now the drawings are there, whether the drawings are on cash form or in the goods form. We need to add all of these in order to calculate total drawing, that is 120,000, for example. Now the closing capital value is not given. We need to calculate closing capital. How? For example, we have assets given at the start of the year, end of the year, total assets and total liability. If we deduct total liability from total assets, we are left with the figure of closing capital. Now let's suppose total assets are 600,000 and liabilities are 150,000, and the total capital is 450,000. Now my dear students, whenever we add opening capital, additional investment and profit, and deduct drawing, we are left with the figure of closing capital. Now what if the closing capital is already given, or we have already calculated closing capital, and we do not have the profit figure? Can we calculate this profit figure? Yes, we need to do reverse working. We'll be starting with the closing capital. We'll be starting from the bottom, and the figure, that drawing that we used to deduct, normally we need to add this up, and we need to subtract these two items that we usually add these. Okay, now we are left with the figure for profit for the year. Now there is a logic behind this as well. Let's suppose this is your business and you have 450,000 capital at the end of the year, and you have drawn money out of your business worth 120,000. Okay, if we do not have done drawing this year, our capital would be higher or lower? Our capital would be higher, because if we have not drawn this money out of our business, so if we add up this, the we are left with the capital of maybe 570,000. Okay, 570 capital we have at the end of the year if we do not draw anything from the business. Okay, in this year we have 570 capital at the end of the year, and at the start of the year we have capital of 150 including the investment. So the capital has increased from 150 to 570. Now why is this capital going up? Is that some sort of magic? No, it is basically a profit for the year. Okay, and on the other hand, if this figure is in negative, this means this is the loss for the year. So my dear students, I hope I was able to communicate with you, and I was able to explain you the concepts underlying single entry incomplete records. Thank you.